Hello guys, welcome to another video where we'll try to explain everything you need to know about Uniswap. Uniswap is the biggest decentralized exchange at the moment, and it's the base of a lot of DeFi applications of today, and especially the base of a lot of DeFi applications which are being built right now, even on top of Uniswap. Basically everything here is based on Ethereum. You can trade any ERC20 token available. There are basically two perspectives of Uniswap. One perspective is the trading perspective. So if you just want to trade, first you have to connect a wallet, which you see here at the bottom. So you choose first start off here, version 2 and version 1. Uniswap had also already made quite some progress, and at the moment you should only use version 2, which is the default setting anyway. So to start off, as I said, you have to connect to a wallet. You have here several options. Most of you will probably use MetaMask as I do. And in MetaMask, you can even connect directly your hardware wallet like a ledger and have direct access to these coins without ever sending any coin to an exchange. So let's assume you have connected here a wallet, and then you would see at the top here your balance in this wallet, and you can then choose which token you want to trade. So you see, it's always a currency pair. On the one side is the from currency, and on the other side is the to currency. At the moment it's set to Ethereum as a from currency, but there of course are all the options in the ERC20 space you can choose from. The same is true of course for the to side. So here you can choose any token you want. I could choose here now BET, but if you want to choose another token which isn't listed here, since here are only the big ones or the most popular ones, you have to enter here the token address, which you will find on the project homepage or on CoinGecko, for example. I've mentioned this in my other video, which I will link up at the top here, where I also tell you about how to not get scammed on Uniswap, how to find such a token address. So it's really worth to check this other video out anyway. But let's assume now I've chosen a simple token, BET, which is listed here. So I have now both currency pairs here. I want to trade from Ethereum to BET. So if I enter here any Ethereum amount, of course, I need to have this amount in my wallet, but let's assume I want to trade 5 Ethereum. I see I can trade it for almost 7,000 BET at the moment. Interesting to see here is this stuff at the bottom. You see here a price, a slippage tolerance, and also some information down here. First, I would start probably to explain the slippage. The slippage tolerance can be set up here. That's the setting window. So if you choose here, you can define what slippage tolerance you want. Default settings are 0.1, 0.5, or 1, or you can enter whatever you want. So the slippage tolerance basically influences how far you are willing to accept a lower price than it is at the moment. So basically to explain it a bit further, we have to look at how the price on Uniswap is calculated. Since you might already know, and which I will explain later on, all the liquidity on Uniswap comes from liquidity providers, and you yourself could be a liquidity provider. So for any trading pair, there is liquidity provided by several users where they split their holdings into half, in this example, half Ethereum and half BET. So you're basically trading with other Uniswap users via smart contracts. So if you look at the Uniswap white paper, which I've opened here, you see here the price formula used on Uniswap, the price oracle. It isn't taken from anywhere else, but you see here the marginal price offered by Uniswap, not including fees, at time t, can be computed by dividing the reserves of asset A by the reserves of asset B. And this is really important. Basically, the price you're seeing is always dependent on how many assets are provided onto Uniswap for asset A and asset B. So in our case, Ethereum and BET. So you see here the basic price that is calculated. And the slippage basically means then how much you influence these reserves by your trade. For really small pools, which probably this one isn't one of them, but for really small pools, and a trade of 5 Ethereum or 50 Ethereum, or the bigger it gets, the more you influence the whole price, since you lower one of the side of these liquidity pools. So if I sell now my Ethereum and buy BET, I lower the amount of BET in these pools, and with that I influence the price. So you see here the price impact is really interesting, because the price impact is relevant for the slippage. So here you see the price impact of my trade will be 0.27. So it's well below my slippage tolerance. If I enter now 50 Ethereum, it already gets bigger. The price impact is now 2.65, whereas the slippage with 3% is still higher in this example. So this means if I enter this trade, you see if I would want to trade 50 Ethereum for 67,000 BET. So the price it calculates is around this value here. So the minimum received, even though here is a different amount, is 65,000. This amount is calculated with the slippage basically influenced by this trade. So the bigger my trade is, the more I influence the price on Uniswap. If I increase it even more, let's say 500 Ethereum, I really have a big impact on the price, and this would be well out of my limits of 3%, so this trade wouldn't happen. So in general, you see, you always have to check how much you influence the price with your trade and if it's within your slippage tolerance. That's one disadvantage of Uniswap if the pool is rather low, but it's really good to already see in the beginning how big of an impact you will have on everything here. So to summarize, the slippage and the price impact only exists because the price on Uniswap is calculated as the basically ratio of the two pools they have for a currency pair. And the more you buy from one currency pair or sell from one currency pair, the more you impact this price, which is even relevant for your trade. Interesting is, since Uniswap doesn't really take outside prices right now, there is a lot of arbitrage opportunities of the big trades. And of course, a lot of people have programmed arbitrage bots which always try to minimize these price differences to other exchanges. So if you really make such a big trade, almost immediately some trading bot will exchange on the other way around. So the price is again like the price on other exchanges. So there isn't any arbitrage opportunity left in the end. Another important point when you trade on Uniswap is the speed of your transaction. Right now, as of today, the Ethereum network is really clogged and there are a lot of transactions waiting. And if you don't really speed up your transactions, you might wait for a really long time that they go through, or they might not even ever get accepted. And of course, this is a problem if you want to trade with your Ethereum. So always pay attention if you really want to get this rate here, or let's make it a more realistic example here with 5 Ethereum. If you really want to get this rate right now, pay attention that you really take a fast transaction in the settings if you really submit it to the network. So we already talked about the pools on Uniswap. So you always have also the option not to only to trade on Uniswap, but also to try to provide liquidity on it. This is the tab here, Pool. So you see you can go over here, add liquidity, and there another screen opens with two pairs. As you already have seen, the price on Uniswap is always a ratio between two assets. So if you want to provide liquidity, you have to provide the equal amount of both tokens for this pool. And the amount is always relative to the currencies, of course. So if you choose here Ethereum, and let's stay with BET for this example, I want to provide liquidity for Ethereum BET pool, it calculates it for you immediately how much you have to provide with the current rate. So if you want to provide provide 5 Ethereum, you have to provide the equal amount of BET to this pool. So you have to have both tokens or currencies in your wallet to provide it to the pool. If I want to do that, of course, after I would have connected my wallet, there would be a button, Provide Liquidity. I would send it to the pool, and here you see the necessary information. That's the rate of BET per Ethereum, and vice versa, the ratio Ethereum per BET. So it should be an equilibrium. And if you provide this liquidity, these both tokens, Uniswap doesn't notice or manage any balance sheet that you provided 5 Ethereum and so much BET, but you get a share of the pool in the form of a Uniswap token. And this token price, of course, varies also with all the fees earned and stuff. So you see here, if I provide 5 Ethereum and roughly 7,000 BET, I get 0.27% share of the pool. And the share of the pool is basically all the trading fees generated on Uniswap. And usually, at the moment at least, every pool gets 0.3% of every trade in the form of fees. And in this case, for any trade happening in these currency pairs, the pool gets 0.3%, and you would get 0.27% of these 0.3%. Let's talk about the concept of impermanent loss, which is quite important if you want to provide liquidity in Uniswap. In this example, let's assume you have 5 Ethereum and you are interested in providing liquidity in a pool of a token called token, which is valued at exactly the same price as Ethereum at the beginning. So the price is 1. So if you just keep your Ethereum and you don't do anything, you still have 5 Ethereum in your wallet. If you want to provide liquidity, however, you have to swap 2.5 Ethereum for token, so you now have 2.5 Ethereum and 2.5 token, which is still valued at 5 Ethereum, since the price of one token is 1. Now in scenario 1, the price of token compared to Ethereum drops 50%. If you have kept your full stack of Ethereum, you of course still have 5 Ethereum left. However, if you provided liquidity, you now have 2.5 Ethereum and still 2.5 token, which however lost half its value, which leaves you in the end with 3.75 Ethereum. This loss of 1.25 Ethereum is called your impermanent loss. In scenario 2, the price of token doubles. In the first case, you still have 5 Ethereum again. As Uniswap liquidity provider, you would still have 2.5 Ethereum and 2.5 token, which are now, however, valued at twice the price as you've bought them. So you end up with 7.5 Ethereum. If you now look at it differently and think about either investing all your 5 Ethereum into token or provide liquidity in Uniswap, you get another perspective. In the beginning, you would have 5 token, which equals the value of 5 Ethereum. In scenario 1, you would have only a value of 2.5 Ethereum left. In scenario 2, you would end up with the value of 10 Ethereum. So if you look at it like that, providing liquidity instead of just holding a token is also kind of a risk reduction. You earn less on the way up, but you also lose less on the way down. And in addition, you earn trading fees by being part of the pool. So it is always up to you if the trading fees outweighs the danger of impermanent loss, or if you are even happy to lower your risk compared to just holding everything in one token. So now I also want to show you several links which are really interesting for the whole Uniswap universe. Of course, there are more and you can Google for them, but there are a lot of tools helping you to find the most valuable pools on Uniswap where you can achieve the highest ROI, and also you can track your whole investment. So to start off, I show you this site because in the context of the impermanent loss, this is a really interesting website. It's called zumzoom.github.io. So here you can show for almost any token the ROI by token. Yeah. Here the 3 different curves you see here. Of course, the lower part is the trade volume, but the red curve are the collected fees, the blue curve is the impermanent loss, and the yellow curve is the net profit. As you see here, the impermanent loss, of course, goes down. As you have seen in my whole explanation, you lose basically value instead of just holding the token or coin if it goes up. But here you see you earn collected fees, of course, and the sum of collected fees and even impermanent loss results in a net profit. So even though you didn't hold only the full amount of the token, but split it in the Uniswap liquidity pool, you would have made more money by earning the fees. That's a really interesting website to see also this concept really well. Another website which is really interesting, I've loaded here an example to show you, is you can analyze your own address here to see how much you earned on Uniswap. It's called uniswaproi.com. So you see I've loaded here an example address, and here you see you invested $1,700, the value today, and the value if you hold it. So you also see here you would have made more money instead of just holding it with providing the liquidity on Uniswap. And then you see here the ROI you made, the price ROI, and the net ROI. It's really a good website to track your overall performance in the liquidity pools. And if you really want to farm for the best deals, this is also a really interesting website. Here you can sort by the biggest ROI on Uniswap. And of course, this changes quite quickly. New pools have always a high ROI since the liquidity in the pool is in the beginning rather low and you earn most of the fees. But the more people join a pool, the lower the ROI gets. So it's probably not worth always switching between pools whenever you see a bigger ROI in another pool, but it gives you a general idea how to look for valuable pools to invest in. So that's it, guys. I hope I was able to help you a little bit to better understand Uniswap and the concept of impermanent loss, and if it's worth for you to invest or provide liquidity in a Uniswap pool. If you have any questions, please drop me a comment, and otherwise, see you next time.